Welcome back, everybody, into another daily recap. Today is the day of the CPI, of the inflation data, and we're going to see how it impacts the market, especially the main pair, which is gold, used as a safe haven and hedge, as due to the fact that it's a precious metal against the inflation. We also see, of course, Bitcoin and Euro dollar. So let's jump into it. We also have the FOMC minutes, not big news from the last meeting, confirming the tapering bias. Let's jump into it. So on gold, what we saw, what we were expecting from this morning was, of course, price ranging up until the inflation data, inflation figures coming up. So I was expecting, as you can see, was not 100% right. So I was expecting high risk that with a higher CPI, so higher inflation, of course, we could have seen price breaking up from the order block that was created and like this for weeks. But I wasn't actually expecting price to go above 1781, but we already see that it went. But of course, inflation is the one of the main catalysts that move gold, as you can see, give direction of supply and demand of the gold and precious metal. And of course, FMC supporting the tapering talks, but was already well known. So let's jump into gold on the 1 minute chart, as always. Let me fix it for you. From the morning, as you can see, we have to shrink it a lot due to the very high range, very big range it played today. We come from the London session. Already during London session, what we saw was a steady climb, as you can see, from London. We saw a steady climb with price breaking above 1764 very slowly. Let me just do something before it ruins everything. Okay. Okay, computer, you can do it. Okay. Okay, you can do it. I know, I trust you. As you can see, well, this bullish trend line, retest above 1764, very slow volume. Look at the size of the candles, how big, how small they are, and how much time it took. It took to New York Open for price to actually break above 1772 key level, and well, here we were slightly above 1776 PSA. This PSA is, let me show you exactly this one, those previous highs from the NFP and unemployment rate the last week. So what we saw was, of course, the report of CPI. So usually we prefer to look at the year over here, and we saw that the consumer price index overall increased 0.1%. We are still well above every other normal regular inflation. We are still increasing, and we are overall not in a good place for it. Let me just show you the lines. chart. Look from May. Look the spike up. Yes, we are sort of steady from July, August, September, October. But if we go, okay, it doesn't want to go. Why don't you want to go? Okay, as you can see here, we are at the levels of 2008, 2009. We are well above what is normal, which is usually around the average should be around 2, but as you can see, we spiked up, then we spiked very low in 2009 due to all the interest rates, the tapering talks, and the economy reopening, and not even reopening because it never closed, but bouncing from the crisis, and then stabilizing. We were kind of below 2%, and then the Fed, with all the printing, with everything, brought the inflation well above the target in order to average it at 2% over time. So as you can see, we are still very high. We are still we're not even in a decline. So what we want to see here, of course, the main bias is, to me, is bearish, is bullish, sorry, for gold because of the role of gold as an hedge against inflation. Okay, I can do this. But if we zoom in, we see that immediately price dipped below 1776, and even with a nice break and retest below 1772, moving around 170 pips overall, 100 pips below the key level, and then bouncing at 1759. What is really important to me is that we got caught in this is all my opinion, in this. I don't know what's happening with Epic Pen. In my opinion, we got caught in this one, and we try to find reasons why gold should be bearish. Like, yes, the inflation is high, but it's not growing as much as the fear was that we feared of. Um, the Fed is talking a lot about having the tools to deal with it, but we know that the inflation is still high. In September, let's see what happened in September. Was the 14th of September here, exactly here. What we got was that the inflation was even less than prior, less than forecasted, but still gold was pushed up due to the fact that it was still, as you can see, was a consensus, was not above, but gold was pushing up due to the fact that 5% is still a lot, is still very high for inflation data, and that's why it spiked up, as you can see here. Today, if you go to today, what have I done? So today, where the price was even here, when the inflation was higher than expected, higher than previous, still well above the 5%, to me, there was no reason to be bearish on gold. To me, there was only reasons to be and stay bullish due to the fact that the inflation is still high. So if it played like this the other month, what happened in this month that should have changed the bias? In my opinion, nothing, because the Fed has been saying that they have the tools since December, since January 2021. Uh, the tapering talks are more about the labor market figures. They're not that much about the inflation data. Yes, they are sort of mm, optimistic, but still the data is very high. And that's why I was very confused. I didn't take any trade at all. But okay, you see these cells, but mm, not even the inflation data broke below neither the key level, neither the huge price and demand area that was chopped up, as you can see from all the previous weeks, as a strong price sensitivity area. You see never breaking, and you see a double bottom being created exactly at the level here. It's already the start of the new 4-hourly candle, which makes a lower wick failing to break below the key level here, and you see other bounces. This for me would have been the first signal that all this move was possibly a liquidity grab. So like it happens on when there's an FP, when there's any move, we just wait a second. I'm back. And for me, it is just a big liquidity grab that happened like we see most of the times at big news report and event and report coming out. So we saw this liquidity grab. For me, the bias was overall bullish. What we see is that we see a double bottom. So liquidity grab, double bottom, new 4-hourly candle makes a lower wick. Not even the new 4-hourly candle breaks below. And then New York Stock Exchange makes a top wick and then continuation down. No, you see a double bottom and rejection from 1759, break and retest of 1764. And for me, this would have been they confirm that this was a liquidity grab, because look at the nice size of the candles breaking above each and every price sensitivity area on the left hand side. Here breaking above this PSA. We are in New York Stock Exchange, doesn't make yet a lower wick, but okay, you can enter here as a scalper, break and retest. You have the confirms of the double bottom. You can enter here. The only thing is you are very close to New York Stock Exchange. But this break and retest of 1772 level was very, very nice and clean. And you have 1, 2, 3, and this is the first confirm of strength of buyers. So for me, this would have been an entry. And then you see price breaking and retesting on the dot. These previous weeks I was watching live was not retesting the bodies, was just retesting the wick. But anyway, nonetheless, continuing bullish. And after that, keep pushing because as I told you, as you know, price gold is an edge against the inflation. And it moved like 300 pips on the upside after 170 pips liquidity grab. You want to take into consideration from the double bottom, it's 350. It's the double the size. After that, of course, we are just ranging. But to me, this was the real bias was this one. We see a bearish liquidity grab, which is absolutely normal. We see a double bottom at a new 4-hourly candle, and then we see that the new 4-hourly candle grabbed liquidity, made a top lower wick, and then just continuation up, bullish with the higher and higher demand of gold against a weak US dollar. To me, this was the main bias. I couldn't take advantage of it. My mind as a real-time trader is not yet sharp, but this was pretty. I'm not saying clear, but in insight for me, this was the explanation. Euro dollar jump on the 1 hour time frame to see the analysis from the morning. As you can see, we we were still continuing playing bearish due to the dollar strength that have been in play since for many weeks. Well, many weeks from the start of September, from when tapering talks came into play, into the scene. Now we are just right now at this previous PSA. We were playing a nice and bearish trend with very nice pullback, continuation down, pullback, continuation down, pullback, continuation down. But we know that even when the dollar is very strong, the pullbacks are equally strong. So you don't have a nice and clean trend. You might end up having very choppy, very difficult to trade high time frame trend. Now we are at this PSA. We have still a lot of space for price to then continue down with further dollar strength, which still has to come. Of course, to me, on a high time frame, we are still bearish due to the tapering that is going to happen in more or less 1 month. It's going to be announced at probably the next FOMC meeting at the start of November. So what we were expecting, as you can see, a bounce from 1.1563 that played out. Let's jump on the 1 minute, and then the buys above the same level. So if we have to be completely honest, what we saw was slow, very slow London session. This is 1.163. We were moving up. Then we failed many times to break and make into new highs. Again, retesting those previous order block lows and then melting down. This is at the CPI news, which gave immediately dollar strength, which gave 200 pips on gold, as you saw. But then the same, what was a double bottom on gold is a double bottom on euro dollar and then spike up. much less clear, but as you can see, price still climbing his way up, or like so. It gave you from here, from this price point, 25 pips on the downside, and gave you 55 pips on the upside after grabbing liquidity. The same, exactly same as the dollar index chart, which we're going to see later on. This one was this, and the buys above 1770 for more than 250 pips. Okay, this one is done. This one loads. We're going to see Bitcoin. Bitcoin followed very nicely the ideas. So what we saw was a break below 55,750. Of course, we were expecting some exhaustion at this high price point. We were not expecting price to just okay on the block, up, retest, and then up on the block, up. No, because we are almost at the all-time highs price points at 60K. So it's very normal to expect some exhaustion, some need to grab some more liquidity, and then possibly continuation up, and then validate that there's not enough liquidity, and then continuation down. As you can see, we had during the last hour of yesterday a nice liquidity grab on the downside to 54K on the dot, immediately rejected. And then this morning I was expecting either, as you can see, a double bottom at 54K, which was missed for like 20 pips, because he reacted at this PSA on the left hand side. If I just go here, as you can see, here is where it price reacted and bounced back up, also gave another retest, bounced up for 250 pips with the buys from this price point, the safer buys from 55,750, safer buys not working yet, but the bias is very bullish. Let's jump into the 1 minute, and as you can see, you will see that there was very strong bearish action leading to the 54,250 price points. Of course, these were high risk, high reward entries, but as well, these the high risk, high reward was here as planned, 54K, but we got a double bottom here, another double bottom here, another rejection here. So you start seeing that this price point today is holding very a lot of strength and is a huge demand area. And this is, of course, 54,500, so already 20 pips up from the 50 pips up from the price point, but we never reached it. You see just price climbing his way up, retesting those previous highs, and then just PPL to PPL has some reaction at these previous highs as well. Not really on the dot, but probably, and then continuation up. Over here, or like 260 pips. As you can see, price didn't really react here to the CPI news, but still gave against the dollar weakness, gave a nice bullish price action, or like as I told you, 270 pips, more or less. Here I want to see the dollar index. To show you the dollar index, let's jump on the 30-minute. As you can see, we got here, even on the 5-minute, it's much more clear. At the CPI report, we had dollar spiking up, failing to make new highs, break into the previous highs, and then rejecting and going very bearish, keeping the structure, as you can see, retesting it, and continuation bearish. As you can see, it mostly followed my also red arrows. We were very, very bullish on the overall high time frame trend. We are still overall bullish because we can react from here, we can react from here, and still overall bullish. But we can, of course, identify that we are sort of creating another block with those, maybe just even here, with all those rejection at these previous highs. And if even CPI gave this bearish move, and also the NFP move failed to make into new highs, that's we can expect stronger rejections. And that's what happened on our main pairs, on gold, on EuroDollar. As you can see, very, very strong bullish action on them. But this is it, guys, for today. Hope you guys enjoyed. Had some issues, but it's all good. See you guys next time.